The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 15th, terrific Tuesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, really, that is truly what it's all about. So let's go look at one of our tools. This is a tool I call the shadow of ignorance is fear. You know, fear is one of the greatest challenges you and I face. Fear holds us back from the fullest expression of ourselves. Fear prevents us from loving ourselves as well as others. Fear can even lock us inside an invisible prison. Now, fear does have uses that can serve us, such as instinctive awareness of danger and, of course, without fear of consequences in risky situations such as trading and investing, we might rush in where angels fear to tread. So fear is really a question. Think of it like this. What is it that you are afraid of and why? Write it down on a piece of paper, all of your fears and why. And really, you have to do this exercise on paper. When you do things in your head, it just turns into mush. You've got to put things down on paper because our fears are a treasure trove of self-knowledge, especially if we explore them. Cicero once said, "No power is strong enough to be lasting if it labors under the weight of fear." You're familiar with the expression, what you don't know won't hurt you? Or ignorance is bliss? Well, folks, that is all before Steve. It's all BS because nothing could be further from the truth. Ignorance is not bliss. It causes fear and confusion. The shadow of ignorance, folks, it is fear. On January 6, 1941, Franklin Delano Roosevelt wrote in his message to Congress the following: "We look forward to a world founded upon four essential human freedoms. The first is freedom of speech and expression." Maybe I'll get my speech here under control. The freedom of speech and expression everywhere in the world. The second is the freedom of every person to worship God in his or her own way everywhere in the world. The third is the freedom from want everywhere in the world. And the fourth, the freedom from fear. And that also anywhere in the world. I'd like to leave you with this thought for the day, and that is, an optimist interprets life in the most favorable ways possible and trusts that the best that can happen will happen, while the pessimist fears misfortunes and therefore can attract those into his or her life. When it comes to fear, when it comes to your fears, become an optimist because there is always much to learn, regardless of how much we already know. Work wonders from within, folks. Remember, the shadow of ignorance is absolutely fear. Let's go see if there's any fear in these markets out here. Right now, we've got the Dow futures trading flat. They're up 8 points, trading out at 15,233. S&P futures down a point at 1703 and a quarter. NASDAQ futures up 5.5 points at 3253. There was a little bit of fear in Goldilocks and silver this morning. Gold right now trading off $12 and change, trading out at $12.64. Silver down about 1.5% or so off 34 cents, trading at $21.00. Light sweet crude down 94 cents at 101.50. Natural gas continuing its move higher. I'm going to go for that D point of an A to B equals CD. It's not going to complete that move today. Well, I don't think that it'll complete that move today. If we take a quick peek around the globe here, the FTSE up 53 points right now. The DAX is up 71. They're both up about 0.8%. Over in Asia last night, you had the Nikkei finish up about 0.25%, up 36 points. The Hang Seng up 118. That was 0.5%. And really a flat market, down maybe about 0.2%. That's off 5 points. That was in the Shanghai index out there. So let's start off by taking a look at, what should we take a look at here? Let's go and let's start off just simply with the daily futures. Let's see where it is that we are at. Where have we come from? Where are we right now? And as we take a look at each of these patterns out here, let's start with the Dow futures. The Dow futures thus far 3 very nice trading sessions. Nice, really wide-ranging bars in all 3 days out here. Yesterday, I thought, very impressive, considering we had the market gap down Sunday night, and it fought its way back. Now, what the Dow futures have done is they've made the 0.618 retracement. Now, the retracement that I'm referring to comes off of the high inside the Dow from September 19th all the way down to the low in the Dow on October 9th. If you go from that high to that low, what you'll see is the number 15,272 would be the exact 0.618 retracement. So far, intra-session, what we've hit today is 15,265. Now, this is a normal spot for people to go ahead and maybe take some positions off the elevator. It's like an elevator. There are floors inside this elevator on the way up, on the way down. In Fibonacci terms, the floor 0.382. That's a natural level. Of course, nobody's really going to get off an elevator for the most part when you have a wide-ranging bar like this coming in that 0.382. People are like, hey, let's take this elevator to the next floor up. That next floor up is the 0.618 level, and that's where we hit intra-session here overnight this morning, whatever time it was, inside the ES Mini. Of course, really moving up into that yesterday. So is there really any fear here? Is this a place where folks are going to get off? Well, you'll have some folks get off, but that next level is the target for the Dow futures, 15,442. Whether we hit that today or we hit that over the next couple of days, right now, that's what the message of the markets, the message of these candles are telling us. If you take a look at the move down here, well, folks, and you compare that to the move up, these candles on the move up, extremely impressive out there. That's inside the Dow. What had been considered to be the weak link out there. But as I pointed out to subscribers yesterday, when we really took a look at the Dow, we put it on a weekly chart, and we pulled it back, really not so weak. If that's the weak link, if that's the best that the bears can throw at the market, boy, they really better, I don't know, maybe go into hibernation out there. In any event, let's go take a look at the ES Mini. Let's see what the S&P futures have done. Really same pattern from the standpoint of coming off of the highs from September 19th. That was at a price level, 1726.75, down to the low that came in, which was almost touching the bottom of the rising price channel. We're going to say that it did form that doji candle on October the 9th. Low was 1640. You can see slicing right. Hey, they didn't give anybody a chance to get off in that 0.382 ride on the way up out there. And as we take a look at it, it's made the 0.786 area a normal place to go ahead and take some profits off the table. So we've got the S&P hitting the 0.78, the 0.786 retracement level. The Dow futures hitting the 0.618. These are normal places to see some kind of pullback. Will we see that pullback today? Well, let's go take a look at the other markets. Let's take a look at the NASDAQ futures. The NASDAQ futures made it up and closed over the highs from October the 2nd. That high, 32.51. The actual close of the futures contract came in at 32.54, so it closed above. Now, it's made a 100% move of a move. This, too, a normal area where folks would go ahead and take profits off the table. It's made a 100% move of a move. It's done that over a period of 3 days. So we've got 3 that are saying, hey, maybe there is a pause in order here. And then as we take a look at the Russell 2000 on the daily charts out here, we're going to see the same setup that we just saw inside of the NASDAQ futures. Take a look at the Russell 2000 high out there from October the 1st. Yeah, that's the actual high in the futures, 1086.80. The closeout here came in at 1087.70. It, too, 100% move of a move, closed over the highs out there. Now, if we don't see a back-off today, or we see some early selling and then we see a move higher inside the markets, where is it the Russell 2000 will travel to? Well, they'll make that expansion of this set of swing points. So instead of the retracement that we would be looking at, we would go take a look at the expansion of that B to C, of the A to B equals C to up, and the expansion, the 1.272 expansion, takes you up to 1101. The 1.618, I suspect that is really where it's headed to, is around the 1119 area. At 11:15, not 11:15 in the morning, at 11:15 from a price standpoint, you have the completion of the 1-to-1 A to B equals C to up. And it looks like that is where the Russell 2000 is eventually headed to. So today, just like yesterday, but I'd say even more so today, because yesterday the market dealt with a gap down, pretty decent gap down, and just simply clawed its way back. Here what we're dealing with are normal areas where after running a race, you pull over, you get some water, you rest, for the next leg of the race, and we've got the symmetry here. Symmetry, I don't know what not symmetry really. You've got the synergy of everything coming to patterns where you would normally see some rest. So we're going to see what kind of energy is truly inside these markets here today as they continue to trade. Now, what I'd like to do is go take a look at the currency market. Say, is there any kind of indication as to what's going on inside the currency market that could also lead to some potential pullback out here or a continued move higher? And what we would be looking at, it's my favorite currency pair, and that is the Euro-Japanese yen. So as we take a look at the daily chart on the Euro-Japanese yen, well, we can see that it is doing, if we go take a look at retracement levels, we'll go from its high, which was September the 19th, down to its low, October the 8th, and we'll see that it has made the 0.618 retracement level. And what we have seen since it did that in the overnight session, really into yesterday's closeout here, what we've seen is we've seen a back off. We've seen this go ahead and pull back as well. So we've got things lined up that say and suggest we should see a retracement inside the market. 877-927-6648. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow futures off about 26 points right now. S&P off about 6. So what we did during that first section, we took a look at the daily charts. We took a look at, the 4 futures indexes that are out there. We saw that we had 4 patterns, 4 completed patterns where a market would normally take a pause out there. Normally take a pause. That's the indication that you would start to see some type of market pullback. Now, this market has been strong like bull ever since Thursday, those wide-ranging bars as it has come off of its lows. And so if you're trying to figure out, why is the market pulling back? It's just simply because it's gotten to normal resting areas out there. Now, if it really just simply rejects that and just keeps moving higher, it just tells you how much strength underlining is in the system. These are normal areas where you would expect to see some type of retracement. Now, let's go over and take a look at Goldilocks. It's trading down about $8 right now, well off of its session lows. It's currently trading out at $1267.90. Intraday so far, we've seen gold trade down to $1251. It's at $1260, like about $1268 right now. Very close to completing a Gartley buy pattern. That Gartley buy pattern would come in really around the 1233, 1242 range out there. You'd have a nice 1.618 expansion of the B to C swing point right in that 1242-ish range. You've got a 0.786 retracement also in that 1242 range. And then, of course, you've got June 28th. That's the swing point out there. That swing point high is 1234. It's logical, only logical, that what we'll see is gold at least get down there and test that area, that entire area. And I suspect what that means is at least a test of 1234.80. Now, just because it tests that, even if it stopped there for the day, that doesn't mean that it's a buy. It does not mean that it's a buy. You need to see prices reverse. And if you don't see that, then what you're doing is you're stepping into a real falling market. Forget the falling knife. You're moving into a market that has been moving lower, that is trending. All we have seen inside this market, all that we have seen is one counter-trend rally. Not one after another. All we have seen is one counter-trend rally. All you have to do is, we took a look at this yesterday. If you go to a little bit longer-term chart out here, because a longer-term chart is going to help you to understand where's the real trend here. Take a look at this. This is coming off of just take this from the highs in October of 2012. All we have seen is one counter-trend rally thus far. That makes whatever gold does during this pullback here very important, because we could begin to see a change of a trend. And if we're going to see a change of a trend out here, we're going to see these June 28th levels hold. In fact, what I would say is if we're going to really see a change in trend here versus another counter-trend rally, we're actually not going to see gold get down to the lows of June 28th, which is at that 1179.40 range. If we do see it get down there, it's very likely to actually break that area. Why do I say that? Well, it all depends, first, on how long we would see gold hang out right around this 0.786 Gartley buy pattern. because in essence, the pattern is really completed thus far, knowing that we've got a swing point high out here, not a swing point high, but the high of the swing point from June 28th, and that should be an area that would be tested, knowing that we haven't seen any bullish candles on this and this move down here ever since it made a high and it came back and tried to get inside the rising price channel. That was back on September 19th. We haven't seen any bullish signal out here. Yeah, you had a little bit of a piercing candle on the trading session of October the 2nd, but the reality is the body of this candle never got pierced. That means the open of that October 1st level, which was at 1328.20 out there, so you never saw any kind of bullish confirmation. So gold is not anything to get in front of right now. It is absolutely nothing, in my opinion, it is nothing to get in front of unless you're trying to buy a bottom tick out there, and that's a dangerous thing to do, especially in a market when you take a look at the long-term trend. It is absolutely down. The bears have control of the gold market. They also have control of the silver market. Yes, silver is stronger than gold, or has been stronger than gold, but it too had nothing more than one counter-trend rally off of the bottom. And to me, that means that June 28th level is very, very important, because if you're going to see an uptrend, just simply by utilizing something such as higher lows and higher highs out there, you don't want to see silver get down and test the lows of June 28th. You want to at least see some kind of higher low out there, and we haven't seen that thus far. What does all that mean? See a nice little hammer candle out here today, but we got a lot of time left in the trading session for silver and gold. What it does mean is do not get in front of the GDX. Do not go out and try to buy those miners here. You need to see a reversal in gold and silver before you even think about it. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're up to the races. We got the Dow down 58 points, trading out at 15,242. S&P's off 6, trading at 1703. Composite down about 6 points as well, trading out at 3809. Russell 2000 off about $2.50 at 1087.50. Apple is flat. Microsoft up 30 ticks. Google down 42 cents. Cisco up a penny. Leading the charge, the upside, Tesla Motors taking off for outer space. It's up 4%. It's up $7.50. Mac Gray Corp, TUC, is the ticker symbol. Wait a minute, that's up 40%. There must be some kind of merger, buyout, or something. Yeah, GSC Service will acquire Mac Gray. So nice 40% premium on that. FedEx is up about 2% this morning, up $2 and change. Rock Tennessee's RKT. Rocket ship, I like that ticker symbol, RKT. That's up about $1.50 right now, 1.5%. Rio Tinto up 2%. That's up 97 cents. Johnson & Johnson out with numbers before the bell. They're trading up 1% here, up 91 cents. Michael Kors up $1. That's up about 1.5%. Charles Schwab out with numbers before the bell. They're up about 4% here this morning, up 79 cents. To the downside, Teradata Corp. TDC is the ticker symbol. They're up 16%. FLIR, FLIR Systems, they're down $3. That's off 9%. Commvault Systems, CVLT, off 3.5%. Caesars Entertainment, CZR, down 11% this morning. IBM, I believe they're out with numbers sometime this week. I know it's sometime this week. I don't think it's today or tomorrow. It might be Wednesday when IBM is out with numbers. In any event, they're trading down about $1.60 right now. Molly Corp off 18% this morning. Haven't taken a look at that stock chart for a while. Off $1.30. Informatica, INFA, off 3% here this morning as well. Again, our call number 877-927-6648. If you're watching us on Tiger TV, what you are looking at is a chart of the GDX. Now, maybe you're listening on your mobile device or your or radio station, and we absolutely appreciate that. Remember, the archive of this show is on Channel 9, and you can get the live stream by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button, upper right-hand side, 3 little smartphones. Click on that. The show will stream live. You can take a look at this chart here. The red squiggly line on the chart of the GDX, the ETF for the gold miners out here, is the actual gold contract. So if you want to trade the gold miners, you absolutely must be paying attention to what is going on inside the gold contract, because look at the correlation there, the red squiggly, and look at that correlation, directional correlation. Look, you got one is trading at $23. The other's trading out at what? What's gold trading at right now? Let me switch over here. It's trading out at a price of $12.66. So price-wise, you got to put things in perspective out here. So don't be paying attention to just really the direction and the movement there. So you can see that correlation, and you must be paying attention to gold and silver if you are going to go ahead and trade the miners there. Otherwise, you're fighting a trend. Why fight a trend? It would be so much easier to just simply go with the trend when that trend changes. That's why I say when it comes to gold, when I say it comes to silver out there, it's really important that it doesn't actually bust through those June 28th levels, and you'd like to see it at least stop short of that June 28th low out there, just so that it would confirm that there would be some kind of uptrend in place, because otherwise all that we'll be looking at playing again would be some other counter trend rally inside of the miners as well as inside gold and silver out there. Now, as long as we're in this area here, let's go take a look at light sweet crude. Let's go see what it is doing. Another sideways move. Yeah, light sweet crude is back 75 cents right now, but trading out at 101.65, but really hasn't gone anywhere since July 5th. We're already October the 15th out here, so we've had 3 months of where we've had a price range of about $8-9 that it has traveled within. It got to a high of 112, but it saw that for one day. Basically, been traveling in a range of about 109 to around this 101-ish area out here. So just a sideways move, another sideways move out here, and that is in light sweet crude bonds. Electronic market was open yesterday, and if we take a look at bonds, there is this hammer candle that had formed right here. This is an important low out here. This is the 30-year Treasury that we're looking at. That came in on October the 10th. That price low 132 even. Out here, you can see that hammer, again, being tested here this morning. That is important because if that hammer fails, what we will see is really the next area of support just takes us all the way back down to the lows out here at the 128-ish range. So that hammer candle, very important for it to hold. Thus far, it has done its job out there. That's on. And is there a trade? Nothing that I see, but you do want to be paying attention to that hammer candle, whichever side of the trade that you're on, if you are inside a trade in bonds out here, because it would come down when you break that hammer candle, it would come down basically to the next swing point. That takes you all the way back down to the bottom out there. We take a look at natural gas. That has been on the move. It's broken the trend line. It's broken the channel line. It's got a nice move along that C to D leg. It says it wants to get to that $4.20 range out there. Now let's go take a look at some of these stocks here that are popping and dropping in the market. Let's go take a look at Domino's Pizza. I think Domino's Pizza, maybe they were out with numbers or they're coming out with numbers. Let's see. Yeah, they are out with numbers. Domino's Pizza, their net income for the third quarter, $30.6 million versus $26 million. So they've got some nice bottom line growth. Let's take a look at their top line. Looks like they did $404 million versus $378. So they are trading lower out here this morning. So guidance or something, too much pepperoni on one of the pieces. Somebody's got some indigestion or something. But let's go take a look at Domino's Pizza. The ticker symbol here is DP as in Paul, DPZ. So let's go take a look at it. It's pretty nasty looking, so it's candle here this morning so far. DPZ, again, is the ticker symbol. So thus far here, gapping down this morning. Volume so far behind the move, 200,000 shares. Now, this doesn't trade a lot of volume, about 800. Looks like about averages around 400,000 or 500,000 shares. So 200,000 in the first few minutes of trading is some pretty decent volume off of its most recent high out here. Now, it did make a high on October the 2nd, just like the Russell 2000, the NASDAQ did. It made a high with 841,000. Obviously, it looks like it's going to have more than that kind of volume today. If we take a look at where it likely will trade to, it had a big volume bar, no wide price spread, but big volume, so I don't know what was behind this move here. This was on May the 30th. That high is 59.89, low is 59.05. You can see no wide price spread there, but what you did have is 10 million shares. So it looks like that is where Domino's Pizza is headed to. Let's pull this back a bit further out here. A nice-looking stock chart. It's been in one heck of a nice uptrend out here. This thing has been a little rocket ship. If you come back to 2010, the stock was trading at around $11, so it's made a six-banger in that time frame out here. So not too bad, but it looks like it's going to pull back here. As far as trend lines and so forth on this thing, I don't know. This thing has been such a rocket ship, it's almost hard to really draw a decent trend line on it. So, but that's on Domino's Pizza, so it's pulling back here this morning. Let's go take a look at Teradata Corp. TDC is the ticker symbol. That's actually a leader in the clubhouse on the way down. It's off about 16% this morning. This thing, unlike when we were taking like a Domino's pizza. I believe this thing here more in a downtrend. TDC again is the ticker symbol. Let me make sure I've got all the active data on this because that's a pretty wide gap here. Give me a second here to refresh the screen. Yeah, that does look like that is active data. So this thing here this morning. Now this had obviously we had taken a look at this stock chart before, and it had a confirmed A to B equals CD down that would take it to 44.76. It's trading at 43.94. It opened at 44.73 this morning here. So it looks like this thing is going to do more than a 1-to-1. It looks like it's blowing apart with volume here this morning. Let me get rid of a couple of lines on the chart, see where the next levels are inside TDC, see if there's some volume. Let's actually do this. So you can see here, this has been in a confirmed downtrend, plus you had the A to B equals CD down that it had not completed. When you gap down into a D point of an A to B equals CD down, that says that you're going to do more than a 1-to-1. The 1-to-1.272 takes you to about 37.98 out there. But I'm going to go ahead and put this on a weekly chart, see if there's any volume bars that stick out here. And what we can see here is looks like this is, it's going to break apart, going to come through the next swing point from August 19th of 2011. That low is 43.19. Looks like it's going to be testing that area here today. Give me a moment here to, let's see. I'm just watching the news flash come across my house phone here. So House GOP to push separate bill to end government shutdown, raise debt costs, ceiling, blah, blah, blah. So a little bit of selling the news, but more so than, forget about that, just the normal patterns out here, the normal patterns that we took a look at intraday. Right now the Dow's off 79 points. And just the normal patterns where the market has made those moves where you would expect to see the market backing off. So when we take a look at what the market is doing right now, it's doing what it should do. You know, if you were to read a book, if you were to take a look at or just listen to us as the markets make 0.618, 0.786, or 100% moves of a move, that's where you expect the market to actually begin to pull back out there. So that's on the TDC, and I'll go back to the market. We'll take a look at some of the ETFs and so forth, and maybe the futures again here. Wanted to take a look at Caesars Entertainment, CZR. That happens to be the third leader in the clubhouse on the way down. That's off 11% this morning. I don't recall them being out with earnings, so they're not out with earnings. No news that I see on Caesars Entertainment. So let's go see what is happening inside this equity here. It's down about 11-12% here this morning, so gapping down. Let's take a look at the volume here behind the move, try to figure out where Caesars Entertainment is taking on a B point here this morning. Now, the B point that formed on this equity has some pretty good volume there, and that's on the trading session from September the 26th. There was 6.3 million shares. The low of that session is 18.95. So we've been trading here for about 15 minutes. Volume so far, 500,000 shares. So if I do quick math on that, if this volume were to keep up, it's going to blow apart that B point of the A to B equals CD down. Now, it hasn't been down to test the low of that level. That level would, again, be 18.95. If it takes out 18.95 and the volume here keeps up, what we'll see inside Caesars Entertainment would be a confirmed A to B equals CD down. That would look like this. And that would say that Caesars would run not to just the 1487 level, more likely around the 1278-ish range out there. That would be your 1 to 1.272, A to B equals CD, and it would take you back into the breakout session here from February 8th. So the high volume bar that we see inside Caesars Entertainment is a breakout from February the 8th. Prices never made it back to the bottom of that breakout area. The bottom of the breakout area is 1026. That would be one of the bottoms of the breakout area. The other bottom would be the candle session prior to that, which would be right around the low of 849. So it looks like that's where Caesars Entertainment is headed to if it can bust through the swing point, which it has not. It's testing the swing point, and it's trading in there. We'll see if the volume picks up on this. I'll go ahead and keep this up on my screen so we can take a look at this tomorrow and see what the actual volume did do on this equity out here. So that's on Caesars Entertainment. Now let's take a look at some things moving to the upside. Those are, let's see, Tesla. Now we don't want to look at that. Mac, Gray Corp, we don't want to look at that. Let's go take a look at FedEx. Now FedEx, were they out with numbers? It looks like they were, or they've announced a $32 million share repurchase. That's really what seems to be moving FedEx. They've got a $32 million stock repurchase plan. So that's what they've announced. FDX is the ticker symbol here. So let's go take a look at it, see what it is doing. FedEx here gapping up this morning, taking out a swing point. So regardless of how they're doing it, what FedEx is doing, it's not too shabby. The swing point out here, most recent swing point, was on September the 20th, had volume of 2.6 million shares. It's up and over that so far this morning with 500,000 shares. So it's got enough volume to take that area out. Let's take FedEx and pull this back to a weekly chart. Let's go see what FedEx is going out after. So FedEx is making a run for its all-time highs. All-time highs in FedEx came in during the week of March 2nd, 2007. That high is 121.42. Volume out there was 10 million shares on the weekly chart. So FedEx is going to make a run for that. Could be a double top. Only time will tell out here, but that's where FedEx is running to. See, what else do we have moving to the upside here? We've got Wynn Resorts. So we had Caesars Entertainment to the downside. Let's go check out and see what Wynn Resorts is doing, WYNN. And let's go see. That is moving up versus down like Caesars. Oh, I've got to hit this button here, WYNN. It's up about 1%, so $2 and change. So not too shabby here. Let's pull this back. This thing has a fairly large A to B. So we got Wynn Entertainment. That's running for its swing point high from July 19th in 2011. That high is 172.58. It's got 5.8 million shares out there. Let's do this. Let me get rid of couple of things on the screen out here. Let's get rid of these. Oh, how about that? From a time standpoint, we're going to break. When we come back, we'll go take a look at Wynn Resorts. I want to see what it's doing. Then we'll go back. We'll take a look at the ES Mini. We'll take a look at the S&P futures on an intraday chart. We'll go try to put together what the market is doing here and where the pullback might take us. We'll be right back.
It's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts plus a 64% on rest. At Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the opening call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the opening call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You know, folks, I think we should all go over to the Big Island in Hawaii. We should watch all those stars together. No place like watching stars from the Big Island. Let's go take a look here at these markets right now. The Dow is off 52 points. The S&P is down 5. And I want to go back to Wynn Resorts. It's trading out at 169.32. Now, Wynn Resorts is trading into its swing point high. The swing point takes us back to the trading session here in 2011. It is July. Did I grab the wrong thing? How about that? It is July 19th. The low of which is, the low of which is 160.72 to 172.58 out there. So, and it had volume of 5.8 million shares. The black line going across my screen is the actual volume bar out here. This little message, that's incorrect. Now, we can also see is off of the bottom, nice little hammer candle that it formed back here on the trading session of July 26th. So that's our A point. Our B point on the A to B equals CD up is the November 1st, 2012 high. And your C point, just a shallow retracement, giving us a great indication it was going to do more than a 1-to-1 A to B equals CD. That was the November 15th low that was out there. That was the price of 103.34. This is doing a 1-to-2 A to B equals CD up. And it's also coming to that swing point very light. From a volume standpoint, you can see with virtually no volume. In fact, all the way up here, this thing has been going up on light volume. Remember, volume is only one of 4 indicators to help you gauge and understand the message of the markets, the momentum of the markets. It's only one of 4 different types of indicators out here. What we can see, and I showed a tool yesterday when we were taking a look at a equity out here. And this has been in a very nice, strong uptrend. This being, Wynn Resorts. So when something is in an uptrend, trying to get in front of it to short it, it can be a very dangerous thing. Now, if you're going to do something like that, make sure that you are using stops out here. So that's on Wynn Resorts. It should run out of energy as it takes on the swing point high. A close above 172.58 on light volume says that it can move to higher price out there. We'll have to watch to see if the trend changes on this equity because the entire move up has been on light volume. So this is one that you'd want to be paying attention to because if you do see a change in trend here, if it can take out a swing point on the way down and $170 stock, this is one that you would want to actually take a look at from a short position, assuming that the market is also going to the short side out here. So that's on Wynn Resorts. Now, let's try to put this together. Was there anything that could have given you a clue that the market was also going to pull back on top of the mere fact that we were getting to normal 100% move and 0.618 and 0.786 retracement levels? And the answer is yes. You know, all you had to do was take a look at the shorter-term chart of the euro, Japanese yen. This here completed a 1 to 2 A to B equals CD down as was getting into the extreme oversold level. Right now, all we're seeing, though, as it works this condition off, is just not much of a bounce. Really more so of a sideways move out here. And if that's what we really see inside the euro, Japanese yen, it says what we're going to see is more weakness in the U.S. market, not strength. If we see a reversal out of here off of completing this 1 to 2 A to B equals CD down, then the next area that we've got to pay attention to is what happens as it gets back to the bottom of this rising price channel out here. The euro, Japanese yen was the one that gave the secret away that the market was going to break out last Wednesday evening, last Thursday. So we want to be paying attention to the euro, Japanese yen. It is Terrific Tuesday, folks. If you're off to start your day, have an incredibly fantastic, extraordinary day. And always remember this. You have an amazing power within yourself. And that power is so strong. You know what, folks? You can live a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, you can create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday. Look forward to seeing you soon.
Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.